Okay, 15.1 is planning adjusting entries. So you have two learning objectives. You need to be able to, one, prepare an unadjusted trial balance, and then two, you need to be able to adjust supplies and prepaid insurance. So adjusting account balances. Some general ledger accounts need to be brought up to date before financial statements are prepared. Adjusting entries are used to bring a general ledger account up to date. So like it said in our objectives, we're going to be looking at adjusting right now supplies and prepaid insurance. So what happens is every time we buy supplies, we're increasing our supplies account. However, when we get to the end of our fiscal period, we don't have maybe $500 worth of supplies, because even though we bought 500 throughout the fiscal year, we use those supplies as well. So we need to make an adjusting entry to make sure that what we actually have for supplies matches what's in the general ledger. So the first step in preparing adjusting entries is to prepare a trial balance. An unadjusted trial balance is a trial balance that is prepared before those adjusting entries are posted. So here's what an adjusted trial or unadjusted trial balance looks like. So we always start with our heading, who, what, and when. Then we're going to have all of our account titles written, and then we're going to enter in our account balances. Okay, so even if an account does not have a balance, we're still going to include that on the unadjusted trial balance. Okay, then at the end, we're going to total and we're going to prove and rule, meaning we're just going to make sure that our debits equal our credits. If they do not equal, that tells us that we have a problem somewhere. Okay, now we're going to record an adjusting entry for supplies. So when we're doing an adjusting entry, first thing that we need to do is analyze the adjustment. So for supplies, we're always going to ask these 4 questions. Number 1, what are the balances of the accounts being adjusted? So right now we're looking at the supplies account. We need to look at what is the balance in that supplies account. Number 2, what should the balances be for these accounts? So this is where I was talking about maybe our supplies is listed as 500. However, when we do a count of our supplies, maybe we only have $200 worth of supplies. Okay, so that's what the balance should be. Number 3, what must be done to correct the account balances? So we need to figure out, what do we need to do to our supplies accounts, to a supply account, to make it equal 200 instead of 500? And then the last question is just what adjusting entry then would be made. Okay, so in this instance, we have 2 different types of supplies. We have our supplies office and we have our supplies store. So when we look at this first one, when that first question asks us, what is the balance of supplies office? So here we see it's $4,548.17. The next question that we're going to ask is, what should the balance be? And so this 610 is what the balance should be. Okay? Next question then is, what do we need to do to supplies office to make it be 610? So we know when we subtract these two, this is our difference, $3,938.17. We need to decrease supplies office by that amount. So we're going to credit supplies office for that amount. Okay, so last question is, what is the adjusting entry? That means we're going to debit the expense account, supplies expense office, and we're going to credit supplies office. Okay, we're also looking at supplies store. Same thing. Here's what the balance is. Here's what the balance should be. We're going to find the difference between those two. We know that supplies store then needs to decrease by $4,584.61. So therefore, we're going to debit supplies expense store, and we're going to credit supplies store. Okay, here's what it's going to look like in our general journal. We are going to date, we're going to debit our supplies expense office, and we're going to credit supplies office. We're also going to do the same with our supplies store. So debit supplies expense store, credit supplies store. Okay, next one is we also need to look at prepaid insurance, because the same thing for prepaid insurance, we keep on buying throughout the fiscal period, but we're also using it throughout the fiscal period. Okay, so Here we see that the balance, question number 1, the balance is listed as 11,000. However, question number 2, the balance should be 2,800. Okay. Question number 3, then, we know that we need to decrease prepaid insurance by $8,200. Question number 4, then, we're going to debit insurance expense. We're going to credit prepaid insurance. Okay, here is how it will look in our general journal. We have a debit to our insurance expense, and we have a credit to prepaid insurance. These are expenses of doing business because we use that insurance throughout the fiscal period. Same with the supplies. It's an expense of doing business because we're using those supplies throughout the year. Okay, question number 1, which adjusting entry is unique to a corporation? That's going to be our federal income tax expense. And we'll see that one later on. Number 2, what 4 questions are used to analyze the adjustment of an account? Question number 1 is, what is the balance of the account being adjusted? Number 2, what should the balance be for this account? Number 3, what must be done to correct the account balance? And number 4, what adjustment is made? Question number 3, which accounts are used for the adjustment to office supplies? When we are adjusting office supplies, we're going to debit supplies expense office, and we're going to credit supplies office. And last question, number 4, which accounts are used for the adjustment to prepaid insurance? We're going to debit insurance expense, and we're going to credit prepaid insurance. You can now go to the 15.1 work together video, and you will also want to open up your Applia and do the work together while you are watching the video.